let me take it across to Nikun. She's currently in conversation with Laurence Balanco.
Major equity market has made a stunning comeback. Laurence, good morning. Thank you for joining us. Laurence, earlier this year, you had a view which was, your view on the Nifty earlier this year was closer to 17,500. We are now trading at almost 19,000. Have you revisited your Nifty view, and do you think we are in for solid gains going forward as well?
Yeah, if we have to revisit the views from the start of the year, we were taking profits around that 17,000 area, looking for a pullback to 15,400. But the view did change in August when we managed to recapture the 200-day moving average. And our view was, from an October low, we have a strong year end. And last week's breakout in the Nifty gives us a new upside target of 20,185. So we've got momentum confirming it. And probably the most interesting thing in the Indian market right now is the small caps, after underperforming all year, have started to participate. And we've seen a breakout in the small cap index too.
Laurence, historically, December has been a strong month for global equity markets in general. 4 out of last 5 times Dow, MSCI Emerging Market Index, and even Nifty has closed in the green. So are we in for a last hurrah for the year for global financial markets and especially equity as an asset class?
Yeah, but there's no evidence why we shouldn't see further gains in a typical seasonal positive period of time. So these trends that we've seen develop off the October low should continue into the new year, yes.
Laurence, Nifty has made an all-time high after a gap of 1 year, and historically we've seen that when these new highs are made after 1 year, you just don't make a new high, you really overshoot beyond that. So are we in for another 8 to 10% strong move for the Nifty before we actually peak out?
Yeah, so we're still looking at the upside target of 20,185 for this current breakout. We do see some volatility through the first half of 2023. So we would expect to see a pullback and potentially a retest of the 200-day moving average for the Nifty. But more broadly, we think those longer-term uptrends will remain intact, but we would expect some volatility through the first half of 2023 after peaking around that 20,100, 20,200 area.
Do you see the current combination of banks and cyclicals which will drive Indian markets higher, or that could change now?
Well, we've seen some of the laggards play catch up. In particular, what we've seen this week is a breakout in the IT sector. So, that had lagged all year, and we've finally seen that participating into year end. But if we're looking at the long-term drivers for the Nifty's uptrend, we remain bullish on the Nifty banks. And more importantly, if you break down that banks index, it's the PSU banks that are already leading this year's move, and we think they can continue to re-rate versus the broader banks, which remains the leadership group for the market on a longer term basis.
Laurence, India's done very well this year, both on an absolute basis and a relative basis. What are the chances that next year the reverse could happen, which is India remains flat and rest of the emerging market and rest of the world comes back?
I mean, there is that potential looking at other opportunities, particularly when China rallies, and you've seen that through the month of November. When you do get a recovery in China, the Nifty, in relative terms at least, underperforms. And in this case, it meant that it went up less. So there is the fact that, the China market, the Taiwan, Korean markets have been such perennial underperformers over the past 2 years that getting better policy news out of China, as well as a potential recovery in the second half, we could see the Nifty rise less. So it could be a relative underperformer, but in absolute terms, we think the uptrend will remain intact.
So for those who missed the rally completely, which is that they were waiting for a decline, they were waiting for a second half unwinding pressure, which has not come through, what should be the advice now when it comes to buying the Nifty or the bank Nifty?
Well, I mean, I think into year end, we're still looking for this 20,185 area, and we'd look for some volatility through the first, having a peak in the first quarter and a pullback into the second quarter. And I think you'd be lining up that kind of volatility and pullback into the second quarter as a buying opportunity And ideally, weakness in the first half of 2023 back to the 200-day moving average would offer a good risk reward entry point. But in the near term, we think this momentum that you've seen in the market carries forward and takes the market higher.
How would you read into the comeback by S&P? S&P earlier this week crawled back from bear market to bull market. What does that mean? Because S&P ultimately is the mother market. It is the most actively traded index in the world.
Yeah, I mean, I think while everybody looks at this 20% price swing, our base case has been from an October low that you get an overshoot of the 200-day moving average, and you get an upside target of 4,300 on the S&P. And then we are expecting a peak at that level in the first quarter and a retest of the October lows. We've done some work looking at S&P performance once you get a confirmed NBR recession, and you typically see at least an 11% decline once that recession is confirmed. And I think that's the risk in the first half of 2023, which will take the S&P down to at least the 3,600 area in a corrective phase. And if you do get a deeper recession, you easily retest the October lows at 3,500. So we think investors should remain nimble, look for opportunities. And in the near term, we think that opportunity is for a push to 4,300. But come January, February, we would be looking at opportunities to take profit and look for a pullback to at least the 36 to 3,700 area. So remaining more tactical with the calls in the US market.
So, Laurence, I'll break my next questions into a couple of parts. First, for somebody who's watching the show, would you say that whether it is Dow or S&P, whether it is Nifty or Bank Nifty, whether it is the Chinese stocks or the Brazilian stocks, equity markets for next 6 to 8 weeks, so 8 to 12 weeks, could be in an uptrend?
Yeah, I think in general terms, we should see, and you've seen it across the board, even the lagging markets that have underperformed are playing catch up and getting a bid, like the China markets, like the North Asian markets. So I think in general, you do have a risk on rally into the start of the new year.
Would you say that for India, every decline is a buying opportunity, but for every other market, and especially for Western markets, every uptick is a time when you should lock out and book some gains? The reverse pretty much?
No, I mean, I think you have to be more selective. So there's a few markets like Indonesia, which we think, again, like India, you can use pullbacks as buying opportunities. And it's in particular, if you look at these markets in local currency terms, the picture does skew and change if you translate these charts into dollar terms. So there are different structures. But if you're a domestic investor, absolutely the pullbacks in the Nifty are buying opportunities. But likewise, in Indonesia, in local currency terms, you have an uptrend. And Japan, too, in local currency terms, you're above the 200-day, the 200 days rising, 50 days above the 200 days. So you've got good trending phases in local currencies in a few markets across the world. Our conclusion on the US market, we think, as I said earlier, you need to be more nimble and look at opportunistic trades within that market, because we think the volatility will remain high.
What is your view on the dollar index? Do you think the dollar index at 115, 116 has peaked out for a long, long time?
Yeah, we think you're getting a major topping process in that dollar index. And in the near term, we think the dollar index trades down to the 102, 101 area. We would anticipate a rebound sometime in the first quarter back towards the 110 area. But we would make the statement that any rebound in the dollar would be a selling opportunity as that topping pattern completes in 2023.
So for 2023, what to your mind could be the broader range for the dollar index? What are the two ends in which you think the dollar index could move?
Well, we wouldn't expect the dollar index to trade above 110 in 2023, and we would expect it to fall and trade closer to 95 by the end of 2023.
If that holds true, which is the dollar index moves closer to 100 and even goes below 100, the historical correlation is that money moves back into emerging markets and money will move back into commodities. Do you see the script playing out?
Yeah, I mean, it's one of the closest trend relationships if you look at, let's say, the Asian dollar index versus Asia, ex-Japan versus the world. So yes, when Asian currencies are stronger, dollar weaker, Asian equity markets tend to outperform global equity markets. Probably the big trend reversal that you'll see with this top in the dollar is that the rest of world. So if you look at the MSCI World X US, you'll get relative outperformance versus the broader world index. And that really driven by the reversal in the dollar trend at the end of the day. So rest of world assets outperform US assets basically.
Do you see crude also coming back? Do you see crude could come back if the dollar index cools down?
Yeah, it's been quite volatile in crude. And in fact, last Friday, we were looking at a break below this $85 to $88 support area. But after the last 4 sessions, we've had consecutive gains and Brent has managed to recapture that $85 to $88 area. So we're getting some whipsaw signals within Brent. Essentially, you've got this broad trading range of 85, 88 being the bottom end, and roughly 123 being the top end of that range. So looking for more volatility and not a very dynamic trend in Brent right now. It's more of a trading range.
So if you have to, let's say, mark 3 assets for us where you think markets right now are extremely overbought, which is that sooner than later they will have to align to their means. Which are the 3 asset classes or markets where things are extremely overbought?
Yeah, we probably think overbought's a misused term in technicals, because most of these indicators look at the momentum and the rate of change of momentum. I mean, I would highlight where we've seen that slowing upside trend and a reversal is obviously in the dollar. And we think that trend continues to unfold in favor of further dollar weakness. We've recently seen a base breakout in gold, and we think that will continue to re-rate. At least in the first half of 2023, and we've got upside targets of 1890 to 1900. So we think gold can outperform. And then if you're looking at the relative performance, we think emerging markets can outperform developed markets from their recent basing pattern and in the first half of 2023.
What about the reverse, which is that where do you think things are extremely oversold and you would play for a bounce?
Well, I think you've already seen it playing out. Right now, there's no extremes on markets. The most extreme sort of oversold markets in October was the China markets, and you've seen the significant rebound in those markets. And those markets aren't at an extended level to what we've seen previously. So, yeah, I think looking across asset classes, we don't have an extremely oversold market, if you want to use that terminology. Right now, we've already seen November relieve some of those extremes that we saw in October.
Back to India, Laurence, if you have to, let's say, look at 3 years out, not 3 months out, what we've discussed. 3 years out, if you have to look at Indian markets, especially the Nifty, what could be the potential of Nifty and how high do you think it could scale?
So clearly long-term uptrend is there, the re-rating, we get these periods of a trading range and then a breakout like we've had after the past 10 months. And this market can quite easily be closer to the 30,000 area.
Okay. And do you see that will be led by financials, the current leaders, or it could be a combination of new sectors also jumping in?
A base case is financials is the key driver for the current uptrend in the Nifty, and that's the driver. If you're looking at that 3-year basis, we think will continue to be the driver on a 3-year basis and a longer term basis. There will be other sectors that participate here and there, but the general trend and re-rating in financial should be the key.
Do you see global markets, and I'm talking about Western markets, reclaiming the 2021 or 2022 highs in next 12 months? Could that happen?
Sorry, I just missed the first part of the question.
Markets, I'm talking about the US markets especially. Can they reclaim their peak highs which they made in December 2021 and early January 2022? Do you see that happening in 12 to 14 months?
Well, we don't see it in 2023. No, like I said earlier on, we think there'll be more volatility heading into the first half of 2023 after peaking at 4,300. And we don't see the structure into the start of the new year. that can get us to new highs in 2023. That may develop in the second half of 2023, but as it stands currently, we think it's a low probability event that the S&P makes new highs in 2023.
That's the word coming in from Laurence Balanco of CLSA, talking about the longer uptrend remaining intact for India.